Markets still had a rough day today, not nearly as bad as yesterday, but we have more data. We have some economic data that came out this morning. We've got PCE and we've got GDP data that came out hot early hours, early session this morning, and the market reacted pretty well to it. Welcome back. I am your host Kyle, and today's date is July 25th, 2024. So let's just jump into PCE. Personal consumption expenditures were just a smidge above expectations, forecasted at 2.7%, came in at 2.9%. So that's revealing that there's still spending going on with consumers, even though that there's pretty high credit card debt and quite a bit of balking about not having money in the checking account, not having emergency savings accounts built up, not having the ability to pay off a $1,000 emergency payment if people needed to, but there's still spending just going on pretty strong. I'm not quite sure what is going to be the tipping point here. Maybe it's going to be inevitably a higher level of unemployment will lead people to then really pinch down on their spending habits and start looking at what they're paying in interest on their credit card debt. You know, perhaps it's the fact that people still have jobs and unemployment is still relatively low, that living to paycheck for them feels almost comfortable in a way, and they know that, well, I don't need to be so concerned with this credit card debt and paying it all off now because I know I'm going to be getting a paycheck tomorrow. Last time we were in this type of environment, we had very high unemployment. So there was a much different reaction. There was a much more visceral reaction to people adding up on credit card debt and needing to get a hold of their spending. Now, the real kicker here was the gross domestic product growth data that we got in. It was forecasted at only 2% and it came in at 2.8%. Previous to that, we had data come in at 1.7%. Now, taking a look at the S&P 500 chart, we can see right when that news came out this morning at about 4:30 Pacific time, it responded pretty well and then it sold off pretty strong into the open. I presume that was just based on some of the momentum that we've been carrying from the previous few days. Just before markets actually opened for the day, though, we started rallying pretty strong from 53.92 all the way up to 54.92, almost exactly a 100-point move, and then immediately reversed that and came right back all the way down later in the afternoon, coming right back to 53.91, closing the day pretty much at lows. I think there was definitely some expectation that we would make even newer lows from that. We held on strong right there at the bottom of that 53.90 level, and it seems to be recovering just a little bit since then after hours. So we will have to see if that continues to sell in the overnight session. Though in my opinion, the data was pretty good. It shows the economy is still growing, consumers are still spending. Now let's think ahead here, because again, the Federal Reserve is going to be making their interest rate decision next Wednesday on the 31st at the end of the month here. And though they're expected to not make any changes this month, they are at 100% expectation to be lowering interest rates at their September meeting. Not to intentionally be contrarian here, I just don't think the data is supporting that. I think the data is supporting that the economy can basically take it, keep the pressure on. I think Jerome Powell and the Federal Reserve members are going to look at this data and say, we might want to still sustain the higher for longer narrative. And I think the consumer spending is a big portion of that decision making. What the Federal Reserve wants to see is that consumers are saying, enough is enough. I can't afford this anymore. I'm not doing it. I'm not going out and spending on extra stuff I don't need. I'm not going out and spending on anything other than basic necessities, rent, food, mortgages. Now, obviously, the Federal Reserve doesn't want people out dying homeless in the streets, but if we're supposed to be economically in a tightening phase, trying to pull liquidity and money back out from the markets, and meanwhile, people are still out spending as much as they can on brand new cars and fancy jewelry, expensive vacations and travel and this and that, then it becomes counterpoint to the whole monetary tightening cycle that we're supposed to be in. So while we have had more and more data that shows that inflation is moving in the right direction, we're sub 3%, unemployment is ticking up just ever so slightly. Otherwise, I think the data still largely shows that the economy is doing fine and we're not at the point yet of needing to lower interest rates. Now, I can certainly be wrong, and we will have to make a further determination on what might happen in September based on the language that we see coming from the Fed next Wednesday. Though personally, I think those 100% odds in between now and September's meeting are going to come down quite a bit. And there's a lot of data to come out in between now and then. The FOMC decision in September isn't until September 18th. So we still have a month and a half in between next week and the following meeting after that of high interest rates taking their effect and getting more and more economic data to determine if it's going to be right at that time. Now, if we don't end up getting an interest rate lowering event in September, well, the next meeting beyond that isn't until the beginning of November. So we're talking another month and a half until then. So if the data is really not showing that we need it by September, then I would start to even be hesitant to suggest that we need it by November. It's certainly possible that we do get one interest lowering event before the end of the year, though look back in January how many were being predicted, upwards of 3, if not more than that. And so far, we're still batting zero. Now, company earnings are another important data point that doesn't necessarily get looked at from an economic perspective, but they do tell some of the story of what is happening on the business side of things and the production side of things. And I understand these companies coming out with, granted, some of them are beating their expectations in both categories, both earning and revenue, but they're coming out with a little bit lower forecasted expectations on what the performance might be like for the rest of the year and going into 2025. Though we have to remember, this is on the coattails of a number of these companies doing share buybacks and trying to drain as much of their free cash as they have available. It's almost as if these bigger corporations are trying to force the hand of the Fed a little bit. They want those interest rates to come back down so that they can get more and more lending available to them and go out and go back forward towards innovation, spending a little bit more loosely, and trying to get their numbers back up even higher than they are now. Now, stay tuned because we have more economic data coming out bright and early in the morning, and we may see a pretty strong reaction from indexes to this data as well. We have core and non-core PCE price index data for month over month and year over year coming out, and we also have personal income month over month and personal spending. So data mainly around what consumers are doing and how they're feeling about spending, but that will just further tell what we might be able to expect from the Fed in the coming 1 or 2 meetings. Now, we did have a good amount of earnings coming out today. We had 133 companies reported before the market opened, and we have 138 that reported after market close. So individual stocks are probably just bouncing all over the place, tugging and pulling each way on indexes. Friday, not a whole lot going on tomorrow earnings-wise. Next week, though, again, especially Wednesday, I think Wednesday is just going to be absolutely wild. We have 111 companies reporting before market open, and then we'll have the Federal Reserve making their interest rate decision right smack dab in the middle of the day, and then we have 179 companies reporting after market close. Now, hopefully that moves in a direction that's beneficial to all of us, not necessarily just straight down like we had yesterday. But I'm hoping that if it does move in a positive direction, that we get a pretty significant move, maybe in between 1 to 2 full percent. So don't go anywhere. Keep checking in. Tomorrow I will have a quick little update post-market session just to bring everybody up to date one more time. And then next week should be a fun one. So thank you so much for watching. Please consider liking and subscribing. It means so much to me getting the support from y'all as my viewers, and it really helps grow this channel. Thanks again. I will see you tomorrow.